Hey everybody, Boris BK Forex. Welcome to the weekly technicals for September 11th to September 15 for the majors for euro dollar, dollar yen, pound dollar. Buck beaten to a pulp is really the theme of last week. The critical question, though, the really big question in front of us is, will we get any kind of a bounce the upcoming week? There is potential here for a bounce, especially if Hurricane Irma, which is supposed to hit the Florida coast this weekend, is less terrible than the market thinks. At this point, the market is pricing so much negative risk into the dollar. It's pricing the North Korean ICBM launch, the massive havoc that Irma is supposed to wreak on the Florida coast, a huge amount of economic destruction, and underlying all of this, of course, is the fact that the Fed is going to have to just pump money, keep monetary policy accommodative. U.S. yields are now on the 10-year almost at a 2% level, way below where they were even a month ago at 225, and essentially going the wrong way. The point being is the market sees zero chance of the Fed tightening by December. That's why the dollar has just completely fallen out of bed. At the same time, everybody else in the world continues to grow relatively okay, and their monetary policy tends to be tightening. Dollar yen, of course, is the exception to the rule, but it's just simply trading on risk aversion flows. And all of this is just combined into just a one-way market against the dollar. But the one-way market is clearly overstretched at this point. And I think technicals are starting to show us just a tad bit of exhaustion. We'll take a look at the charts here and just see. But before that, let's look at the calendar and see how the calendar sets up for the week. It's not nearly as active as it was last week, but we do have a couple of major events, especially it's mainly UK data that's going to be dominating space here. There's nothing really on the European side of any import, just maybe a little bit of final CPI, nothing really of great import. UK data is going to be important because we have CPI data, which could inform the Bank of England central bank meeting on Thursday. We also have UK jobless claims, which again could inform how well they're going to view the monetary policy. And then retail sales, same day as the Bank of England. We are actually bullish all three UK events, suggesting that the Bank of England could be more hawkish than the market thinks. Cable is acting the best of all. We're going to take a look at the charts here. To me, this is the most favorite trade, relative strength trade. We're coming out. It's Brexit or no Brexit. The market seems to completely be ignoring the political risk and just simply focusing on the fact that the monetary fundamentals, economic fundamentals are starting to tighten, and therefore cable had a big breakout this week. So to me, that's probably the strongest and most interesting trade on the major side. Euro doesn't have a lot of risk. And then US, of course, we have to survive the hurricane. And then after that, we have really only one major event this week, which is two major events. We have the CPI data, which will be interesting to see if that sort of comes off the floor and shows any kind of a uptick. And then retail sales, which will be very interesting. But we are actually bearish retail sales, and that suggests that maybe there's a little bit more trouble for the dollar, or at least a mixed picture for the dollar, not nearly as unequivocally bullish as it is for cable as we're looking forward into the week. So let's take a look at the charts here and just see what the charts are showing. Oh, sorry, before we take a look at the charts, let's take a look at the support resistance lines. So support resistance lines really shifted here. In the euro now, we are at 3-year highs, 121 is the area that everybody's focusing on. 119 now becomes a support. Yen has really broken everything, took out the 108s, which was a huge support area, and now support comes in at 107 with 109. The resistance. As a matter of fact, I'm going to talk about the yen chart here because I think the yen is an interesting trade and how you should be looking at it at this point as far as analyzing dollar strength or dollar weakness. And the pound really took out very nicely the 130 level, and now 133 very much in play. So let's look at the charts here and just see what they're telling us. So the euro, obviously, first and foremost, this is a weekly chart. We see the stall. And now we poked above the 21s, we poked above the 20s, but we haven't been able to break the 21s. 21 is a pretty key area here. It will be filling this gap over here on the weeklies. A breakout above 21 really does put us on path all the way out towards the 25s, and would suggest that there's more momentum to this move. If we kind of stall out in front of this 21 level and kind of reverse, that might be a low risk opportunity for a short-term correction all the way back down to 19, perhaps even 1850 on the euro. Euro is grossly overbought, but so far doesn't give us a clear signal of a turn, although maybe just a modicum of exhaustion of momentum on the charts. Now, dollar yen, tempting as it is, and I really would love to bottom pick here. You probably could bottom pick here against the 107s. We had a minor kind of a scoop up off the bottom here that you could use as your reference point for a stop. But generally, if you look at the dollar yen structure here, the critical thing to me that pops out is the fact that this 110 level now acts as a cement ceiling. To me, dollar yen doesn't become a definitive buy, a truly durable buy, unless we can clear the 110 to the upside. So you have a long way to go here. You do have certainly a potential here for a dead cat bounce, and I think that's really what you're going to get is a dead cat bounce in a dollar. And therefore, I would be only trading it for 60, 70 points to the upside. You are no doubt bottom picking here if you trade against this 107 bottom. But given the fact that we've had a lot of exhaustion, you would need to see the hurricane news, the Korean news, either shaken off by the market, in other words, market testing the 107 and not really breaking it, or turn, meaning that the news is not nearly as bad as the market anticipates. Very, very tenuous, very thin read signals here on the dollar yen. You really are stretching to want to get long this thing, and clearly not as definitive as you want it to be. Now, cable, on the other hand, completely different story. This is a uber bullish candle, and probably one of the cleanest, strongest trades you can take here. We're ending pretty much on the week's highs. We've cleared this 131 level. The next level that is the true resist area is this whole 33, 34 area, and frankly, it's really the 33, 35 corridor. This 35 corridor is seminal because that was the break of the Brexit line. Taking out the 35s was the imaginal line between pre-Brexit and post-Brexit, and we've bumped up against that several times since Brexit news has been announced. So can we make that run towards that 135 line? Absolutely, especially we have 3 positive UK data points in front of us this week. If those play themselves out, there's a very reasonable chance here that cable could really make a move. This is a bullish, strong candle, suggesting that we have at least a modicum of maybe 100, 150 points to the upside as we go forward. So that's how the week shapes up. Of all the majors, cable looking to be the strongest, cleanest, best signal out there.